Hi everybody, my name's Griffin Bridgers. This is part 3 of the basics of the portability election. In this part 3, we're going to look at the effect of remarriage on the portability election made by the estate of a previously deceased spouse, and how downstream that can affect the surviving spouse or subsequent spouses in the realm of that DSUE, that unused exclusion, and how it might be used. Now, before we get started, I want to remind you again, this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. So, in this series so far, we've looked at the background in part 1, what the law looked like before portability and what that led to, and in part 2, we dove into the eligibility requirements for making the portability election. So in this part 3, like I said, we're going to explore what happens upon remarriage and what are some of the general rules surrounding that. In other words, could somebody rack up DSUE's unused exclusions through multiple marriages? And what we're going to find out is essentially no, depending on the level of use. So, where we can get confused here is in the identification of the parties, especially when we're dealing with the deaths of multiple spouses. So, even with this explanation, this may not help you as much, but I'm going to abbreviate some terms. First and foremost, BEA and DSUE. So the BEA is the basic exclusion amount given to every U.S. citizen and resident, which is currently 12,920,000, indexed for inflation. But a DSUE is the unused BEA of a previously deceased spouse, which was being preserved for a surviving spouse through a portability election by the estate of that deceased spouse. So keeping in mind those terms, BEA and DSUE, we look first to the surviving spouse, who's always going to be the party for whom a DSUE is being preserved by a previously deceased spouse. Now, we're going to always relate back to the time when the DSUE was preserved when we use this label of surviving, even though in some contexts we're going to look at what happens at the quote-unquote surviving spouse's death to that DSUE that was previously preserved for them. So even though surviving and death can be conflicting labels, we're really using surviving spouse in the context of for whom was a DSUE preserved, and were they surviving at the time of that preservation or that portability election. We're going to look at multiple layers of deceased spouses with respect to the surviving spouse. A surviving spouse could have first deceased spouse, also sometimes deceased spouse 1, who's preserving some DSUE. We could also have second deceased spouse or deceased spouse 2, who may or may not be preserving some DSUE for that surviving spouse. Then when we look at the other end, if the surviving spouse has DSUE and then they die with their own surviving spouse, we're going to label that person the second surviving spouse. That's the person the surviving spouse is married to and then predeceases, and we're going to look at what happens with the surviving spouse's BEA and any previously preserved DSUE. So in that context, I want to remind you of some big picture items with the estate and gift tax. Again, that when we look at the BEA and the DSUE, those add up to the applicable exclusion amount, which is applied as applicable credit against the estate tax that would be due on the sum of the taxable estate plus adjusted taxable gifts. I'm going to emphasize adjusted taxable gifts because it's important to look at that in the manner and ordering of how we apply DSUE versus BEA to offset gift taxes on lifetime gifts by the surviving spouse. So, with that context too, in the gift tax, since our applicable exclusion amount, BEA plus DSUE, can be applied as applicable credit against estate or gift tax, what we're going to see in the case of a surviving spouse is that if they have both DSUE and BEA, and then they make lifetime gifts, their DSUE is going to be deemed to be applied before their BEA in computing gift tax. Now, what's going to happen here, the issue with all of these applications is going to be determining what happens upon remarriage. So for gift and estate tax purposes, the surviving spouse is generally only going to be able to use the DSUE of their most recently deceased spouse. So if you have a surviving spouse who's unlucky enough to be widowed multiple times, what we're going to find out is that the intervening event of a second deceased spouse's death is going to wipe out the DSUE of the first deceased spouse that is not actually used for lifetime gifts before the death of the second deceased spouse. Now, I want to note there's an exception carved out here where this only applies to an actual death of a spouse. Now, in some contexts under estate plans, we might treat divorce the same as death, but under the tax regulations here, divorce is not treated as death. So, for example, if the surviving spouse remarried and then divorced, and that second deceased spouse died after divorcing the surviving spouse, that would not affect the DSUE left from the first deceased spouse. So, we're going to look at 4 examples here on the basics of how this applies. So, in example 1, we're going to look at our general rule where we have multiple DSUEs. So we're going to assume deceased spouse 1 dies, leaving a $5 million DSUE to the surviving spouse. And that's going to be our common fact throughout these 4 examples. Then surviving spouse in this example is going to remarry, and then their new spouse, deceased spouse 2, is going to die before the surviving spouse can use any of the DSUE of the first deceased spouse. Then the estate of deceased spouse 2 is going to preserve the DSUE of deceased spouse 2, which is $3.5 million. As a result of that portability election, the surviving spouse's new DSUE is going to be $3.5 million. Essentially, that wipes out the DSUE of deceased spouse 1 of $5 million, and the surviving spouse now only has $3.5 million, which can be applied to offset estate tax and gift tax. So in example 2, we're going to look at a scenario where deceased spouse 2 doesn't actually make a portability election, or their estate does not. So we have the same facts: $5 million from deceased spouse 1, surviving spouse remarries, and new spouse dies before the surviving spouse can use any DSUE. But in this case, the estate of deceased spouse 2 is not going to make the portability election to preserve any DSUE, or maybe doesn't have any to preserve in the first place. So this goes back to our general rule that the triggering event here, the intervening death of deceased spouse 2, is going to wipe out the DSUE of deceased spouse 1. So in this case, the effect is that surviving spouse loses the DSUE of deceased spouse 1, leaving them with only their own BEA to offset gift and estate tax in the future. Now, let's assume that same facts, but before dying, the surviving spouse divorces deceased spouse 2, then deceased spouse 2 dies after the divorce and doesn't make the portability election. But in this case, since there was an intervening divorce, we don't treat the deceased spouse 2's death as this intervening event that wipes out the DSUE of deceased spouse 1. So in this case, since surviving spouse and deceased spouse 2 divorced before the death of deceased spouse 2, the last deceased spouse for DSUE purposes is still going to be deceased spouse 1. So that means that the surviving spouse will still have the $5 million DSUE of the first deceased spouse. Again, this illustrates that the only intervening event that wipes out DSUE is not remarriage, it's not divorce, it's the death of a second spouse if there is indeed a remarriage. Now, I mentioned that the DSUE can be applied to both gift and estate taxes. So what happens in that scenario? Well, same facts: deceased spouse 1 dies, leaves a $5 million DSUE, surviving spouse then remarries, but we're going to assume that during the marriage to their later deceased spouse 2, the surviving spouse is going to use $1 million of the DSUE of deceased spouse 1 as gift tax applicable credit. So later, deceased spouse 2 is going to die, and the estate of deceased spouse 2 is going to make an election to preserve the DSUE of deceased spouse 2. That's going to be $3.5 million like we saw in example 1. However, in this case, we're going to have a new set of rules that applies where the DSUE of the surviving spouse for gift tax purposes is going to be replaced. It's going to be $3.5 million. But for all intents and purposes, it's going to be $3.5 million for estate tax purposes, but we're also going to count that $1 million because it applies towards the lifetime taxable gifts that are going to be in part of the estate tax base. So really what we can say is that for estate tax purposes, in this scenario, the surviving spouse's DSUE is going to be $4.5 million. It's going to be the sum of the DSUE of the most recently deceased spouse plus any prior DSUE actually applied to offset gift tax. Why do we really get into this? I want you to keep in mind, again, that the estate tax is applied to a tax base consisting of the taxable estate plus adjusted taxable gifts. So it makes sense in this scenario that if DSUE was applied to offset gift tax on lifetime taxable gifts, that portion that was used against those lifetime taxable gifts should also count as applicable credit against that estate tax base. So for estate tax purposes only, what we can state here is that the surviving spouse's applicable exclusion amount against estate tax is really going to be made up of three components, not just their BEA plus the DSUE of the most recently deceased spouse, but also it's going to include the DSUE of any previously deceased spouses that was actually applied to lifetime gifts before the death of the second or even most recently deceased spouse. So we have these three elements we have to keep in mind, and that can get a bit confusing, but it helps when we look at strategy of how we can strategically use the DSUE. Now, to bring things home on this remarriage issue before looking at what happens at the surviving spouse's death if they remarry and leave a widow, well, keep in mind you can only use the DSUE of the most recently deceased spouse for gift and estate tax purposes. However, the surviving spouse is not going to be dinged for using the DSUE of their first deceased spouse for lifetime gifts, as long as it's used before the death of the second deceased spouse, or even the subsequent. You could go third, fourth, fifth, whatever ordering rule. Also want you to remember that lifetime gifts are going to use the DSUE first before dipping into the basic exclusion amount, the BEA. And then it's not the act of remarriage that wipes out the DSUE of the first deceased spouse. Instead, the triggering event is going to be the death of a subsequent deceased spouse that wipes out the DSUE of the prior deceased spouse. So, with that context and those general rules, what happens if the surviving spouse is themselves survived by a spouse who we're going to refer to as the second surviving spouse? So, when we look at the DSUE, it could potentially be used by the surviving spouse to offset gift tax on transfers to a second surviving spouse, or estate tax on transfers to a second surviving spouse, as long as those transfers don't qualify for the estate or gift tax marital deduction. So in other words, you could use DSUE, for example, to fund a SLAT during life, or even to fund a beefed up credit shelter trust at the surviving spouse's death. However, it's a use it or lose it proposition. The DSUE of a previously deceased spouse cannot be preserved by the surviving spouse for their second surviving spouse, but it can be applied to offset gift tax for transfers that benefit that second surviving spouse. So really, the way we get there is found in the code and regs, where there's an ordering rule where it says that the DSUE that's preserved for the second surviving spouse, or any surviving spouse for that matter, is going to be the lesser of the BEA of the first surviving spouse, or the positive difference between the applicable exclusion of the first surviving spouse, which is the BEA and DSUE as we looked at, minus the taxable estate and adjusted taxable gift. So essentially what this means is that first surviving spouse can never preserve more than their BEA for the second surviving spouse, but they could use up more than their BEA in the form of a DSUE through lifetime gifts or in transfers at death that benefit the second surviving spouse in a form that uses gift or estate tax applicable credit, i.e. in a form that doesn't qualify or use the marital deduction. So, I know that's a lot, but you know me, I like to complicate things, but I also want you to be thorough in your analysis. So what's next? Preparation of the 706 and also valuation issues that come into play as well. Then we'll dive deeper into the question of who qualifies for the DSUE, especially when we look at citizenship and residency requirements. Then we'll compare benefits and detriments compared to the traditional AB planning methods versus the use of the DSUE, and also estate equalization. We'll also consider more how the Q-tip election factors in and what basis planning implications might exist. Now, not all of those will be standalone. They could have factors that lace them together, and we won't necessarily cover everything in that order. Well, that gives you a roadmap for what's coming up. As always, if you're a tax or estate planning practitioner, if you have any questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com with the caveat that I cannot give tax or legal advice in response to your questions. And if you enjoy my content and you'd like to have me as a speaker for any of your upcoming estate planning council, bar association, or other events, please feel free to reach out as well. But I thank you again for listening to this video, and I look forward to seeing you in my future content.